Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Larry Reaugh, President and CEO of American Manganese Incorporated. His website, AmericanManganeseInc.com. He's speaking to us from Vancouver. Welcome back to This Week in Money, Larry.
Well, I'm glad to be talking to you again, Jim.
The Canadian stock exchanges no longer have an uptick rule in place. Can you explain what the uptick rule is and how it works?
The uptick rule was a solution that was developed back right after the Great Depression in the mid to late 30s that said you couldn't sell a stock you didn't own, which meant that you had to borrow the stock, number one. Number two, you couldn't sell it unless it was an uptick, and which means a price uptick. To give you a simple example, if it was $1 stock, you couldn't sell it till it was $1.01, and that, corrected the market, brought confidence back into the market, and then we went on for the next 80 years with that.
Did the uptick rule basically ban shorting?
It didn't ban shorting, but it made it more of a bet. Now, without an uptick rule, it's a total opposite of that.
Who benefits from an uptick rule being in place versus who benefits from it being removed?
Well, let's take a look at who benefits. Well, first of all, the entire country benefits because the economy is a lot stronger because investors are putting money into projects and companies, and they invest in these things expecting they will make money. They invest over a period of time, so that if you bought a company, Canadian Barrick, at the early stages and you hung on to it, you'd have become very wealthy. It didn't matter if you bought Microsoft. If you bought that at the early stages, you could become wealthy too. So it benefits the investor, and it benefits the company, it benefits the country, and it benefits, of course, being the country, the economy.
If the uptick rule came back, would it be good for the Canadian economy?
Well, let me answer the other part of the question, and what's that do for the predators? The predators basically no longer make a bet on whether a stock is going to go down by shorting it. It's more that they have the opportunity to manipulate the direction of the stock. And that benefits a small group of people, usually traders, brokers, day traders, funds, people that have the capabilities and the knowledge to realize that constant selling on a stock will drive it down and guarantee profits.
What does that do to the average investor?
Well, it destroys the average investor. And, as you've seen on the TSX Venture Exchange, the investors have lost 99% of their money. And what's that do for the economy? Well, some of these companies employed anywhere from 5 to 100 people. Now they're lucky if they employ any. To maybe the top employment companies would be about 20 or 30, and I'm talking about the incubator companies.
Are these rules just too onerous for real investment?
That's where people go to speculate now. They go to the casino because with no uptick rule in Canada, you have better odds of playing a rigged game at the casino than you do buying a stock on the various exchanges.
The TSX Venture stocks now trade on 13 different trading platforms. We hear that reinstating the uptick rule over 13 platforms is very difficult to impossible. Is there a way to reinstate the uptick rule with relative ease, specifically for TSX Venture-listed stocks? And what percentage of trades go through the Venture Exchange versus the other platforms?
I'll answer the first part, the last part first, and that is it's probably greater than 90% of the stocks trade on the Venture Exchange. And the various platforms, from my understanding, is that it was very difficult, although I'm not seeing the mechanics of that, to reinstate the uptick rule. But if the TSX Venture Exchange reinstated the uptick rule, then you would have a lot better chance for the incubator companies to finance projects and to develop into the major companies that we have around the world today. It's basically would be the platform, and I think everybody else would follow. Each platform would say, "Hey, we want our fair share. We should also reinstate the uptick rule." I mean,
of course, we've heard from the exchange that it's impossible to do it because of these 13 platforms. Could they do it with ease?
Well, that's what they say. It's not necessarily the exchange. It's comes from various sources like Reaugh, and that it would be very difficult to do that. I know that the U.S. reinstated their partial rule, and they have various platforms. It didn't seem to be a problem. But if it is a problem, again, I reiterate that that if the TSX Venture Exchange was to reinstate the uptick rule, I think that would be a huge benefit for the investors, the companies, and it would, the alternate platforms are basically platforms where these stocks are, without an uptick rule, are being manipulated today.
It seems to me there are so many apps that you can get to do various things. So what if there's 13 platforms or 1,300? Can we not come up with computer programs to deal with that?
Well, you would think so. I mean, when we got rid of the uptick rule, it didn't seem to be a problem. There were various platforms at that time. And, like I say, the U.S. reinstated in 2010 a partial uptick rule where you can't short down more than 10% a day. But you only have to look at the statistics to realize that investors have just withdrawn from the market, Jim. They're not there anymore. They see it as a guaranteed way to lose money. Mind you, there could be a bull market coming up, and that would push the short people to the side if you have a good project and a good story. But some of the companies that have good projects that are waiting for buoyancy in the price or something like that of the commodity that they have, they're going to still sit there and malinger. So, yes, we could have a bull market in certain stocks, and then the rest of the market is not going to rise like it used to, like, the tide that rises all ships. When the bull market comes, it won't necessarily raise all ships.
Do you think it's more important to have multiple platforms or an uptick rule, because it looks like we can't have both?
Well, alternate platforms is a democracy, right? And, you can't just say, hey, you can't have an exchange. You're going to give it a monopoly to one exchange. But it's more important to the economy of Canada, to the health of the companies, to the health of the bank accounts of the investors, to reinstate the uptick rule.
Have you talked to anybody amongst either the regulators or the governments about bringing it back?
Well, I know that various people have. I haven't directly talked to any of them. I know that, that the bureaucracy is where you end up in those discussions most of the time. And it usually stops there. But, I think the interest now, the last white paper I saw on a survey that was done by the TSX Venture Exchange, when the question was asked, what do you think about reinstating the uptick rule, 57% of the respondents said they thought it was a great idea, that it should be done. And, 3 years ago when we first started talking about this, Jim, nobody was talking about the uptick rule, but now you're starting to see it in the papers. They're talking about shorting all the time, and on the Canadian markets, your chances are reduced. It's like reducing the odds on a slot machine. Your chances are reduced on hitting the home run, and they're magnified that you are guaranteed to lose money.
Plus, Canadians are very inventive people. Most probably don't know, but we invented sonar, the electron microscope, pablum, instant mashed potatoes, and as I say, most importantly, the push-up bra. But without a junior exchange that accepts money freely and lets people take their chances, we won't have those kind of inventions anymore, will we?
No, they're dying off. I mean, there's how do you get those ventures going when you can't even get money to raise a trial balloon on it? Basically, a company needs $5 million to develop a business plan that'll eventually give them the answer that if they can proceed with it, it's a new technology, or it's a new discovery, or it's a new this or a new that, and then they can finance it. But that getting that initial seed money today is extremely difficult.
One of the hopeful things I heard, though, about the venture exchange is that an American high-tech company moved here from San Francisco because they thought the Canadian exchange gave them the best chance to develop, even with these tough rules. Is that the kind of attitude we need to encourage more of?
Well, you have to encourage that, but you can't throw up a roadblock by saying that, if you bring lots of buyers into the stock, you'll attract the predators, and they need that buying in order to short a stock. Without buying, they can't short a stock. A lot of the companies are boxed in on both sides by predators. I mean, they're on the bid a cent or 2 cents lower, or in some cases a half a cent lower, and they're on the offer. And that's just the arbitrage between themselves. And then, of course, when the real buyer comes in, that's when they make the real money. So, no, I mean, nothing's going to work for the long period, because eventually not having an uptick rule will crush a company.
Germany outright banned shorting on their stock market. Would that be a good idea here?
I think, personally, I've heard different opinions on that. I think it would be a good idea. But, the reality is, something worked for 80 years. At that time, we had a buoyant market. Let's just take a look at the Toronto Stock Exchange, which is subject to the same things that the TSX Venture is, and that is that you could short. There's no uptick rule on the TSX, right? Now, if you look at statistically at what's happened, you see that other markets around the world have boomed. And the Canadian market has just sat there like it was sucked down in quicksand, and raised its head and then dropped back down, raised its head and dropped back down. I'd have to say that my interpretation of that is that somebody made a lot of money shorting Canadian stocks. I mean, we invited the world to come in here and to destroy our companies, and in the process destroy our economy.
Larry, putting your CEO hat back on, the focus of American Manganese has changed. What's new?
Well, what we found was that our patented process for treating low-grade ores of manganese would work on a recycling of lithium-ion batteries, rechargeable lithium-ion batteries. I'm talking about the automobile industry, not the ones you have in your laptop, telephone, small batteries like that, because we want to focus on a brand name in order to run a program of recycling that would recycle the same material back to the battery manufacturer that they had initially had when they started the battery. So, we've had third parties actually pay good money to have companies come in, or not companies, but law firm. One, for example, a law firm that came in and did a due diligence on our white paper, the one that Chemetco had, initially gave us, on the fact that they thought, or they believed that the chemistry and the mathematics said that we should be able to reclaim lithium-ion batteries, and we got the thumbs up. They got the thumbs up on that. So we think our theory, and we're on solid ground there. We have to do a proof of concept. We can get that cost down to do the initial proof of concept, and then maybe we'll attract a lot more believers. But, we've de-risked it quite a bit by having third parties look at it, and, if we can produce a economic electrolytic metal using this process, we should be able to take the concentrated cathode material and produce and duplicate that cathode material at the tail end of our plant. American Manganese, of course, trades on the TSX Venture Exchange, and it basically has been working with technology for the last 6 or 7 years. We've developed batteries from our product out of Arizona, the lithium manganese batteries, button cells, and proven that the concept of that works. We spent millions on doing that, and also piloting the initial patent. So now we're sitting there with, of course, depressed prices in most commodities, and of course manganese is one of them. And we're looking in our own backyard, and Cametco said, "Hey, this is what you should be focusing on." So that's what we're focusing on, and we'll keep our mining project, and we'll keep our patents for that. But what we want to do is we want to move into a very exciting field, and that's been only made more exciting by the Model X pre-orders through Tesla Motors. I mean, the last I saw, they had 325,000 pre-orders at $1,000 a piece, and that is double or more than double the amount of electric vehicles that were produced in the last 2 years, 14 and 15. So you can see that this industry is going to take off. There's going to be a lot of batteries that are going to be coming up. They're toxic. Currently, they're either going into a toxic waste dump or stored, or they're being sent to smelters to be burned, and they get back some slag, and they get back some of the cobalt, and the rest of it they don't get. But we're looking at an economic solution to actually reproduce the product. And what's that do? Well, it does two things. It gives us a chance to look for a profit center. There's a couple of profit centers in there, and it also is a circular economy for us, because we're not having to dig in the earth to produce these materials, these cathode metals, and in order to make a new battery. We can take the existing metals that are in batteries and recycle them.
Larry, thanks for being on This Week in Money.
Oh, you're welcome.
My guest has been Larry Reaugh, President and CEO of American Manganese Incorporated, the website AmericanManganeseInc.com. That wraps up our show for this week. Thanks to our guest, Larry Reaugh, and thank you for listening. This show can be heard online anytime on TalkDigitalNetwork.com, or check out our YouTube channel, Talk Digital Network. Comments or questions for the show can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.